Hey, welcome back. It's Jason Walter here. It was announced a couple of days ago that pending home sales in the US decreased from 1 year ago as well as from 1 month ago. Pendings dipped by 2.3% compared to August of 2021 and by 8% from 1 year ago. In addition, all major regions in the US reported a reduction of contracts signed from a month ago and from 1 year ago. The decrease of pending home sales is quite evident when you have a look at this graphic here, and this is from the National Association of Realtors, or NAR. As you can see, pending home sale activity has been absolutely all over the place this year, but last year it was extremely elevated and consistent throughout the end of the year. In today's housing market update, I'm going to be sharing all the details with you and what implications this could have on our housing market. Is our housing market slowing down as we head into 2022, or is this more normal for this time of the year? And as always, I'll support my conclusions here with data because I'm a housing market data nerd. And if you're new here, welcome. I post frequent housing market updates so you can make a more informed decision about whether you should buy or sell a house. Please consider subscribing if you haven't done so already, and also check out the link below if you're looking for a real estate agent referral in your neck of the woods. According to Lawrence Yoon, who's NAR's chief economist, contract transactions slowed a bit in September and are showing signs of a calmer home price trend as the housing market is running comfortably ahead of pre-pandemic activity. It's worth noting that there will be less inventory until the end of the year compared to the summer months, which happens nearly every year. Some potential buyers have momentarily paused their home search with intentions to resume in 2022. We will see about that. Okay, let's first talk about housing inventory and what we should expect as we head into the holiday season. Yoon is right that some home buyers do hit the pause button around this time of year and pause their home search until next year. But would-be home sellers also decide to put their plans on hold to list their houses for sale, which ultimately reduces housing inventory, which of course decreases home sales. So have a look at this. This is the total number of houses for sale over the last 12 months. But have a look at September of last year through January. In September of 2020, there was 1.46 million existing houses for sale in the US, and that dipped to 1.03 million by January of 2021. So like I said, a reduction of housing inventory normally translates to a dip of home sales. So more on that here in just a little bit though, because I have some data to share with you guys to compare 2021 to 2019, which in my opinion is a much better comparison than when we compared housing data to 2020. Okay, so before I discuss that, I want to share how each region in the US fared regarding pending home sale data on a month-to-month basis. In the Northeast, pending home sales decreased by 3.2% from August. The South declined by 1.8%, and the Midwest decreased by the most, which was 3.5% on a month-to-month basis. The West fell by 1.4%, the smallest decline of the four regions. Okay, so love it or hate it, Redfin has a really good website to share how housing stats compare this year to prior years. So take a look at this. Here's a really good graphic on their website showing pending home sales for 400 plus US metros. This is more up to date than NAR's report that I shared because this is through October 24th and not September. In any case, the red line is for 2021, and when you compare that to the gray line for 2019, the movement is very similar. For both those years, pendings increased starting around February before peaking around June. Then pending home sales started to decrease just after that. In 2019, that downward trend continued until the end of the year, so it wouldn't be unusual if 2021 followed that same pattern. However, I would be doing you a disservice by not pointing out the fact that Redfin is reporting that the 4-week moving average of pending home sales as of October 24th this year is a 5% increase from last year and a whopping 51% increase from 2019. So in other words, even though sales activity is very similar when you follow the trend of 2019, the sales this year are still very much elevated and abnormal. In fact, Redfin reported that 1/3 of houses sold in the past 4 weeks went under contract within 7 days of hitting the market. This rate has been on the rise over the past 6 weeks during a time when we should typically see a slowdown. It's likely that the market is speeding up now because homebuyer demand is holding steady and strong. Home tours are up twice as much from January as they were this time in 2019. Yet homes for sale remain very few and far between. Homes continue to sell quicker and quicker. More on that here in just a little bit. There are still plenty of home buyers lying in wait who missed out during the spring home buying frenzy, and they were snatching up homes quickly. Now those homes are selling for near record high home prices. The housing market will likely remain hot until mortgage rates rise substantially. And speaking of mortgage rates have increased greatly over the past few months. The average 30-year fixed rate mortgage is around 3.2%. This is almost a 0.5% higher compared to the beginning of August. However, when we look at mortgage interest rates over the past 5 years, a 3.2% interest rate is still phenomenal. It just seems high now because everyone is used to rates below 3%. Obviously, what's different now, though, is the massive increase of home prices. According to Redfin, the median sold price increased 13% year over year to $358,000. This was up 30% from the same period in 2019. Part of the reason why home prices have increased so much is due to low mortgage interest rates, but also due to low housing inventory, which of course is creating bidding wars in some markets still. Active listings, or the number of houses listed for sale, fell 21% from 2020, but down a staggering 40% from 2019. In fact, as of October 24th this year, there were only 654,000 houses for sale in the 400 plus US metros that Redfin is reporting on. In 2019, there were nearly 1.1 million houses for sale. In addition, houses are still selling faster than they normally should this time of the year. So for example, 45% of houses that went under contract had an accepted offer within the first 2 weeks of hitting the market, above the 42% rate of a year ago and above the 31% rate of 2019. Also, 33% of houses that went under contract had an accepted offer within 1 week, up from 30% during the same time period a year ago and 20% in 2019. But even though the US housing market remains elevated when you compare it to prior years, it's still showing some signs of normalcy as we're heading into the holiday season. Homes were on the market for only 23 days on average, a full week longer than the all-time low of 15 days that we saw in late June and July, and down from 31 days a year ago and 44 days in 2019. In addition, 45% sold above the seller's asking price, and that's up from 35% a year ago and 22% in 2019, but the smallest share since April. However, we're not seeing a lot of home sellers dropping their asking prices just yet, so have a look at this. On average, 4.9% of houses for sale had a price drop. That's up slightly compared to 2020 and is relatively flat compared to 2019. Additionally, the sales to list price ratio, which measures how close houses are selling for the seller's asking price, has been falling ever since this summer, but still remains elevated at 100.6%. That's the lowest level since April of this year. In other words, the average home sold for 0.6% above the seller's asking price. In contrast, in 2020 and 2019, houses were selling for less than the seller's asking price on average. All right, so here's my overall big picture regarding all these housing stats, because this is a lot of information to uncover here. But in my opinion, there's a lot of similarities when you compare 2021 to prior years. However, a lot of the metrics clearly remain elevated or abnormal when you compare it to prior years. I hate to be the bearer of bad news, but if you're looking for a housing market crash, that's not going to happen anytime soon. This is of course because housing inventory and of course mortgage interest rates still remain very low. However, if we see a large increase of housing inventory and of course a large increase of mortgage interest rates next year, that could have a negative impact on our housing market in the form of prices. Of course, I'm not a real estate fortune teller though, so what do you think? Comment below. And just for the fun of it, check out this video right here because I posted that video on May 27th of 2020. And by far, that's my #1 video on YouTube with almost 160,000 views. And that was my forecast for the US housing market. If you got any value out of this video, then please hit the like button. I greatly appreciate that, and I'll see you in the next video.